What's going on, everybody? If you're like me, you wait for the Arthur Hayes articles to drop and you love reading them because they have jam-packed information that you can utilize on a day-to-day or week-to-week basis. In this current article, Arthur Hayes maps out the debacle of Three Arrows Capital, as well as their contagion risks that they have on the entire crypto space. I know oftentimes we want to read the Arthur Hayes article and you don't have the time because he writes in long winded fashion and he writes 20 to 30-minute reads. So today's goal is for me to give you a brief summary and a synopsis of his current article, number 3, which just came out yesterday. And I'm going to try to wrap this up in 5 minutes. So let's get started ASAP. First of all, please do hit the thumbs up. Please do join our Discord community if you do like our content. Okay. And the link is below. So first things first, Arthur talks about the TradFi comparison of where we are in the crypto cycle, because effectively you're going to have news and media completely shit on the entire crypto space for the Three Arrows Capital debacle, the Luna collapse, Celsius insolvency, BlockFi insolvency, etc. Right? And you're going to have to just deal with this because our space as a whole does look like it's cratering. However, it has not completely cratered yet. It's only the fact that Three Arrows Capital, Su Zhu and Kyle Davies, who led Three Arrows Capital, basically created this sort of big collapse by themselves by borrowing more than they could put forth in terms of collateral or over leveraging themselves as a fund. So what we have effectively right now is Arthur Hayes talking about Three Arrows Capitals and their loans. Many of the lending businesses that they had have faced gated customer funds and become functionally insolvent. The withdrawal of credit from the crypto ecosystem has caused a generalized market crash of Bitcoin, Ether, and the pantheon of shitcoins. So basically what he's saying is all the stuff that Three Arrows Capital was over leveraged on, or they borrowed from companies like Voyager or Celsius or BlockFi, effectively, they're not going to be able to be paying these companies back because they themselves either got liquidated or they just don't have money to pay this back, okay? This point right here, why Lord Satoshi and Vitalik's creation stood the test of time. Now again, Three Arrows Capital failed, but other parts of crypto are still alive. Luna died because it was just a terribly designed product. Celsius died probably because it was also over leveraging themselves or did not have proper collateral to back customer funds. Same thing with BlockFi. And Three Arrows Capital as a fund did some terrible decision making. But Bitcoin and Ethereum stood the test of time, as well as many other DeFi related products. Okay. Here, Arthur Hayes talks about his history and run-ins with Su Zhu and Kyle Davies. They're kind of just, friends in general, and they've maybe done business together in the past at previous trading desks. So effectively, Arthur Hayes talks about here the kind of business that Su Zhu and Kyle Davies were involved prior to their crypto careers. And he talks about how they were basically arbitrage traders and they were in the FX markets. They did that really well, but that's how they really made their money in those spaces. They then got involved with the Terra Luna ecosystem, put in a good chunk of change, I think $200 million or so. Don't quote me exactly what Arthur said, but somewhere in this article, he does talk about the amount of money that Three Arrows Capital invested, which obviously blew up in their face. He talks a little bit about the Terra Luna project issues and structure issues. Basically, it was a project that was designed to fail, and you could never pay people 20% of yield on money. Okay. He compares the Terra Luna Foundation of providing 20% to the 3 million bonds that are available around the world that you can basically get for countries like Sri Lanka and Ukraine and Argentina and Turkey, which again would have paid you at least 20% yield. But we all know very well that if you're buying bonds for these countries, more often than not, they will default or the bonds are going to be worthless. In the same way, Anchor and Terra Luna became worthless. He talks about the structure of the UST carry trade and how it broke down and obviously how it failed overall. And over here, the game over part is about how Three Arrows Capital had a pretty massive portfolio, which led to a larger contagion the entire Terra Luna ecosystem blowing up in their face, which in fact, led to more and more sell pressure in Bitcoin and Ethereum and other illiquid shitcoins, as he calls. And then that basically led to the demise of Three Arrows Capital. And all this led to centralized crypto lenders, which really blew up in a big way, such as Voyager and Celsius and BlockFi. However, the big takeaway to this article is this, okay? He talks about all that came out through this entire process was crypto at large and DeFi at large did just fine. Okay, DeFi lending protocols such as Compound, Aave, and MakerDAO never suffered any insolvency issues or any issues where they could not have liquidated Three Arrows Capital portfolio because they were trusted individuals. They did their job just properly, okay? So Arthur Hayes talks about the opportunities within DeFi being one of the most, generational opportunities to buy if you still truly believe in DeFi as a standard for crypto and believe in crypto as a whole. And in this particular article called Floaters, also written by Arthur Hayes, he talks about some price to sales ratios and how assets like Uniswap and Sushi and GMX, which is another asset that he mentions, GMX somewhere down here, DYDX, GMX, these assets are going to be part of the DeFi space headed into the next cycle, and why they are coming into very attractive valuations as per price to sales ratios, as per volume, as per user activity. So the bigger takeaway was Three Arrows Capital failed, centralized lenders failed, but crypto as a whole and DeFi as a whole stayed intact. And what you want to be paying attention to is great products that are still doing well, even after the bigger collapse of crypto as a whole. And do they continue business as usual? Compound, Aave, and MakerDAO are at the top of his list in terms of DeFi lending protocols. And then Uniswap, DYDX, GMX, and SushiSwap are also at the top of his list in terms of decentralized exchanges, as well as trading protocols, okay? So that's what I wanted to mention. I know this ran a little bit over 5 minutes, but I hope y'all enjoyed this. I know sometimes his articles are a lot to read, but hope y'all like this. I'll try to do more videos. Please do hit the thumbs up. Follow me here on Twitter, _alpha trades. Hit the thumbs up on our YouTube video, and then follow me on Substack if you want more educational content. We've talked about One Harmony to 2022 predictions, Near Protocol, Stargate Finance and Bridges, music NFTs. We talk about a wider range of topics. And we also have a private Discord community, which you can join and come hang out. We post trading analysis, live trading accounts, which is our 5K trading account that I post videos on every single day of how I'm trading the market, all kinds of amazing information if you do want to join our community, okay? Good luck, everybody. Take care. Happy long July 4th weekend to those of you who are in the US, and we'll talk soon. Cheers.